Hello, everybody, and thank you for joining me today. It's Alan Barry Labakan with the Rocks and Stocks News Show. And today I've got on the Fed meeting eve, I've got a show I wanted to talk about. I see three really important trends developing that are leading to another trend that I think is the best way to play what I'm seeing in the first three trends. And one of those is the US dollar. I wrote an article earlier today about the US dollar being under pressure, just as well, it actually started when at the Jackson Hole, Wyoming meeting of the Fed, when Powell started to telegraph that they were getting ready to lower interest rates. And since then, the jobs data has come in horribly, and basically the jobs market is in free fall. And ultimately, where the jobs market goes, so goes the economy. And when you look at the dual mandate of the Fed, or the one they talk about constantly, is the jobs, full employment, or price stability. They're at a point now they have to throw one or the other under the bus. And with the jobs market in free fall, uh, which will put pressure on the economy or is a sign the economy is under pressure, ultimately, I think that they will choose tomorrow to cut interest rates and throw inflation under the bus. And we're seeing that. I'm going to pull up the chart here of the US dollar on FinViz. Hold on a second. Okay, so this is on my Substack, by the way. If you're not signed up to my Substack, please do that. That's where you'll find all of my work as I put it out. You can find everything I do on my Substack. And so, what was in this chart that I really wanted to point out were a couple of things. One, the US dollar has been in a bear market for pretty much all of, or not pretty much, for all of 2025. It peaked out here at about 110 on the index. This is a futures index, by the way. It peaked out at about 110 in early January, and since then it's been in a bear market. And it didn't take long for it to start trading below the 50-day moving average. And then for several months, February, March, April, May, June, and most of July, it traded below the 50-day moving average. And then it went sideways for about 5 or 6 weeks. And, I often look at these sideways actions, or I look at them as inflection points. And often the direction prior to the inflection point gives you an indicator of where it's going next. And I've talked a lot lately about it before it got under the 50-day moving average. And then I've highlighted since. And I didn't highlight it because I thought it was going to go from, let's say, 98 to 96. Why I highlighted it is because I think that this is the start of more of this action, where it trades well below the 50-day moving average, and you see the 50-day moving average dropping dramatically. And that's what I think we're heading into right now as the Fed lowers interest rates. And due to the way that the uh, jobs market is in free fall, a quarter point, a quarter percent move is going to do absolutely nothing. Even a 0.5% will do nothing to combat what's happening with the jobs market. Now, I have pointed out many times in my past reports that I believe strongly that the numbers that come out, the economic numbers are manipulated to overstate the economic growth in the jobs market and understate inflation. Uh, and the constant revisions are kind of are clear-cut evidence beyond a reasonable doubt that they are manipulated to understate inflation and overstate the jobs and the economy. Nonetheless, the jobs market is in free fall, and that's going to put the economy under pressure. And so, for it to be stalling the way it is, a quarter point or a half a point move is going to do nothing. I think what we're going to see tomorrow is that the Federal Reserve cuts by a quarter point and then leads people to believe that they are going to monitor the data very closely and and probably hint towards more rate cuts this year and going into 2026. And I would contend that even if the economy, even if they cut, they're going to need to go back towards the free money era in order to prevent a recession, or even to slow it from going into recession. They're going to need to go back in towards the free money era, where you had interest rates virtually zero, or at least a few points, several points underneath the inflation. And so I see that is the only way they're going to be able to combat the problems in the jobs market and the to try to prevent a recession. But what that will also do is create more inflation. Currently, it's sitting at about 3% inflation. And depending how aggressively they go with their rate cutting, I think that it could be heading towards 4% or even towards 5%, the official number. I know that consumers feel the reality a lot more, and they know that the inflation is much stronger than the government numbers come out with. Nonetheless, using the government's numbers, and I think that 4 to 5% is in the cards as they try to fight against the recession and to help the jobs market that's in free fall. I've talked a lot. I'm not going to go into a lot of why I think this is happening, because I'm here to talk about trends today and what the Federal Reserve. I've talked a lot about why I think that the jobs market is in free fall and this sort of stuff. Um, and so you've got several. The reason I say 4 to 5% inflation is because you've got several contributing factors. One is, well, the interest rates, if they do what I think they're going to do, which is head to back towards free money era, and also get back, and the Fed gets back into the quantitative easing business, because they'll have to, in order to move down that much, they'll have to manipulate the yield curve. So I think that this is all very inflationary. The US dollar itself is inflationary because the economy, whether Trump and his friends like it or not, the US is dependent on imports to for the economy. Now, maybe they can do something about that. Probably it would not be at the earliest until well after Trump is gone from his current term. But in the foreseeable future, over the next few years, imports are going to continue to be important. And if you got a lower U.S. dollar, Well, that means that the price of what's coming in is going to cost more. And so that's another pillar of inflation. And a third pillar, of course, is the tariffs. Now, I know those on Trump team say that tariffs are going to be transitory, or they're not, they're going to be a one-time event, or they're not even going to be passed on to the consumers, which is ridiculous. Yeah, sure. Okay, so front running of the tariffs have prevented some of that from happening as they built up inventories to get ahead of the tariffs. But once those inventories are drawn down and they got to fill those inventories back up, well, you're going to have to pay the tariff man is going to come knocking, and then when that happens, I don't see there being any chance that the companies are going to eat it all and not pass that on to the consumer. And ultimately, it's not going to all hit all at once. It'll be layers of those making their way into the, some will fight as hard as they can not to pass them on, and eventually they will have to. So others will do it more immediately. And so it's not going to be, a nice, clean, one-time event, and that's going to cause that. So this is why I think that 4 to 5% inflation is coming. These are the reasons. And so a lot of this is very bearish for the US dollar. And Trump wants a lower US dollar anyways. So he's going to get what he's asking for, but it's going to cause some serious inflation. And I think that this is very bearish for the US dollar, but look at what's happening coincidentally as the sideways inflection point in the US dollar was happening. Look at what has been happening with gold. At the same time that it was going sideways, gold has been breaking out. And so has silver. Interesting, isn't it? So, what are silver and gold telling you? Silver and gold are telling us that stagflation is coming. And stagflation, I've talked about it a lot over the last year or so, and keep predicting that, and have predicted that it's going to become on the tongue, the every investor is going to be starting to talk about stagflation because it's going to be the problematic kind. So far, they've been sort of been able to keep the smoke and mirrors going with the government statistics by overstating the jobs market and the economy and understating inflation, even though I believe consumers feel the stagflation. It's not in the government statistics yet, but it's inevitable. The things that are happening with the jobs market are telling you that it's stalling, and this is gonna this is gonna put pressure on the economy. And as I said, there's all these factors that are going to push inflation up. So so far, when you look at the government statistics, it only looks like maybe 1 to 1.5% of stagflation. I think the real stagflation is much more significant than that in the real economy. But just let's even use the fanciful numbers of the government statistics. But now I think we're at a point where the jobs market is suggesting that the economy is heading towards a recession if it's not already in a recession. Okay. So now you start talking about the stagflation that does get everybody's attention. If the economy is in going towards or in a recession and inflation is persistent and going up, now you've got in the government statistics 3 to 4% of stagflation. And in the real economy, it could be 5 or 6% real stagflation. So that's what gold and silver are telling us. They're telling us that that stagflation is coming, and it's going to be pretty aggressive. We're seeing it in the price of silver. Now I keep going back to my monthly chart in silver and look at this perfect cup and handle that's formed here. I talked a lot about silver getting ready to break above $35 per ounce before it did. And now we've seen that significant breakout. And it is climbing the right side of the cup and handle. And what I think is going to happen is as it approaches $50, it will go right through $50. It may bounce up there for a few days or a week or two or a very short period of time, but then I think it breaks through that. And that is the kind of cup and handle that, the handle is very short-lived and then onwards and upwards from there. And then you get into an environment where I think we see a series of record highs in it, much like we saw since the lows in 2024, or sorry, the start of the gold breaking above 2100 and then making a series of record highs. As you can see, it goes from the lower left to the top right of the chart here. These are very bullish trends. And so this is what I think is in store for silver beyond $50. That we're going to see this kind of performance for silver. And gold is in a wonderful trend that is going to go higher and higher. The what I talked a lot about that was fueling this movement was the death spiral of debt. And that is now getting much worse because the big beautiful spending bill that Trump put out is they're spending more now than in Biden's final year. So as I predicted before he got elected, he hasn't changed his stripes. He's still a spending and debt junkie, and now that's being proven out. And so the debt keeps growing, and the cost of servicing that debt is out of control. And even if they drop it down a couple percent, if you keep growing the debt, the cost of servicing the debt is going to continue to be about one and a half to $2 trillion in 2026 and beyond. And so the death spiral of debt is the fuel of, if you will, the cost of servicing the debt is the the straw that breaks the camel's back. And now throwing on top of all that, you've got stagflation. And ultimately, what's happening is the fiat currency system and debt system is broken. And it took 50 years to break that. And I keep pointing this out because I hear so-called gold bulls talking about, oh, when are we near the end? Where are we? And they're getting nervous because of the price of gold and thinking, oh, it's gonna go into a correction. And I don't think that they are looking at the context of the 50 years that it took to break the fiat currency and debt system. And the world is moving back, at least the smart ones are moving back to a gold standard where they're backing up their US they're backing up their fiat currencies and their debt with more and more gold, which is the smartest move. And something that I keep pointing out of late is I've heard a lot of long-term gold bulls say, well, they were saying years ago that, oh, I don't want to live in a world with $2,000 an ounce gold because they made the case, oh, that's going to mean that the everything has collapsed. Well, everything didn't collapse, and we got through $2,000 an ounce of gold. And then they were saying, well, I don't want to live in a world with $3,000 an ounce gold. Well, we're in a world with $3,000 an ounce gold, and the sky has not fallen. The Federal Reserve has been able to keep kicking the can down the road, and that's what they do. They fight new tooth and nail to keep that fiat currency and debt system alive. But in the meantime, other central bankers are paying attention, and they're starting to back up their debt and their currencies with gold. And so, you know, this is, and now they're going to say, well, I don't want to live in a world with $5,000 an ounce gold, or I don't want to live in a world with $10,000 an ounce gold, or I don't want to live in a world with $20,000 an ounce gold. And in 2024, I made my arguments of why I think that within 10 years, we're going to see $20,000 an ounce gold. And a lot of these so-called experts, gold bulls, experts in the gold market say, well, I don't want to live in a world with 5,000, 10,000, or $20,000 an ounce gold. Well, I do. And the reason I do is because that will mean that the world is going back towards a gold standard. And that means that they're getting away from the broken fiat currency and debt system and moving towards sound money and backing their debt and their currency up with more gold, which is the best thing that could happen to the global economy. Now, the West, people in the West, and that's where a lot of these experts that are afraid of 5,000, 10,000, 15,000, and 20,000 an ounce gold live. And they buy into this American exceptionalism stuff and think that because the US has been able to build its economy up to where it is today because of having the world reserve currency and being able to issue debt like it's going out of style, that's always going to continue. Well, I don't think it is going to continue. And by going back towards a gold standard is the best thing that could happen for the global economy. And even though those in the West, those central bankers in the West and the bankers in the West don't agree and aren't preparing for it, it doesn't mean that it's not going to happen. I think it's inevitable because the debt and the fiat currency system is broken. And so the only way you can fix it is with gold by backing up your debt with something real. And in reality, I wouldn't even stop at backing it up with gold. I'd back it up with silver. I'd back it up with copper. I'd back it up with other metals and other commodities that the world need. The world economies don't need fiat currency and debt. What they actually need are commodities. They need food to live, they need energy. They need to be able to have the things to build the products that everybody in the world needs. These are the real economy. We really need those commodities. So I wouldn't stop at backing it up with gold. I'd have, if I were advising, which they don't call me for, I would have a reserve, a strategic reserve of not only oil, copper, silver, zinc, platinum, palladium, lumber, everything that is needed by the consumers to build the products and the corporations to build the products that the world needs, I would have reserves of those. Now, of course, I think that the way to back up the broken fiat currency system and the debt system is with gold. But for economic prosperity, I wouldn't stop there. I would have, and I certainly would not have reserves of cryptocurrencies like Bitcoin. Who needs Bitcoin? That is a Ponzi scheme that's wrapped up in a mania that is much like the dot-com era, and I think it's going to implode. Now, when there's a Ponzi scheme, sometimes it's hard for that Ponzi scheme to be broken, but it is a Ponzi scheme. It's based, it functions because people keep buying more of it, not because it has a utility that you need it for something. The only utility it has is as a trading, something to trade, like tulips in the tulip bubble, or these kind of things. It's a Ponzi scheme. So I don't think it's unbelievable that they're talking about a Bitcoin reserve, but that just goes to show you they'll fall for anything made up of hot air. They fell for the fiat currency system and the debt system. Now they're going to fall for a digital Ponzi scheme. All right, well, fortunately, not every country is that stupid that they're going to have a reserve of that. I hope that, well, we're already seeing central bankers of the world that are backing up their currencies and their debt with more and more gold. And I think that trend should continue, and it's the healthiest thing. I think that countries should also be putting reserves at least to the amount that they need of commodities for their domestic economies. So, whether this happens or not, time will tell. But in the interim, I see very bullish things for the price of gold, the price of silver, and the best way to play that is through the gold and silver stocks. I'll go back to my Substack here, and in every report I talk about a bunch of companies. You can find my list. Just go to my Substack or my YouTube, and you can find a lot of the companies that I talk about. And what I'm seeing in the gold and silver stocks is even though they've improved in price over the summertime, which is very unusual, especially when the price of gold was going sideways for most of the summer. They've improved quite significantly. A lot of the companies that are on my pick list, almost all of them have improved significantly over the summertime, and which is as I said, it's unusual. Usually in the summertime, gold and silver stocks are generally have less trading activity, less liquidity than your Wall Street stocks. And so when they have less liquidity, if there's any kind of shocks, they tend to go down. They tend to spend, they tend to have weakness during the summertime because of the lower trading activity. But this summer was different. This summer, they were all going up, and there was a tremendous amount of financings. And so, what that is telling me is that the generalist investors are starting to get into gold and silver stocks in a big way. And I think that that's going to continue. And I'm not going to go into all my picks. You can go over, you just look at my last couple of videos. You can even just go into the description and you'll see, wow, why don't I do that? Why don't I just do that for you to give you help you out here? So here's my YouTube and here's my channel. Let's go to my YouTube channel, your channel, and I always go to videos because it puts it into an order that I like chronologically here. So this was my last report where I talked about stagflation. Este producto increíble puede restaurar su valor y a sus lejos. What's happening here? It's putting an ad in. Oh, where's my? Okay, hold on. Sorry about that. So which companies did I talk about in this one? So I talked about Agnico Eagle and I compared it to Tesla on a free cash flow basis. Agnico Eagle in the last quarterly report just blew it out of the water, made multiples of free cash flow compared to Tesla, and yet Agnico Eagle trades at a fraction of the price of Tesla. So if you're looking at free cash flow as a barometer of where to find good opportunities, well, the gold stocks, even though they've gone up a lot, look at Agnico Eagle, since I started picking them back in 2024, early 2024, they were trading at about 60 bucks. Now they're trading at 209. Although the price has improved a lot, their free cash flow and their cash position has grown dramatically. So even though the price has moved up, I make the case that it's cheaper today on a relative basis of free cash flow and cash position than it was when the stock was $60 a share. And so why I use this as an example is not just that comparing it to the overvalued Mag 7 stocks like Tesla on a free cash flow basis, Agnico Eagle is a much better investment than a Tesla. Now, I know there's momentum and all these other factors that factor into how Tesla can get so grossly overvalued because of all these other hype situations. But ultimately, I think that free cash flow is what protects investors. When you can buy free cash flow at a discount, and it's less risky. Tesla is much more risky than Agnico Eagle because Agnico Eagle is growing their free cash flow and their cash, which is the ultimate protector of downside risk. So Tesla is trading at a huge multiple to their free cash flow, and so that is much more risky than an Agnico Eagle. I make the same arguments for Newmont and Pan American Silver. These are my major mining company picks: Agnico Eagle, Newmont. Newmont is one of the best performing S&P 500 stocks in 2025. And I think they're just starting to make an important move much higher. Pan American Silver is my major silver mining company, extremely well run. They got about $125 billion or $1.25 billion in cash and only about $700 million in debt. And they're going to become an even more impressive free cash flow machine if silver does what I think it's going to do, which is to go over $50 and then move into new record highs. And why I like Pan American Silver is as gold has been doing what I think silver is going to do, which is over the last year, well, year and a half, almost 2 years, it's been making a series of record highs. And during that time, so has Agnico Eagle. And in fact, Agnico Eagle has significantly outperformed silver. Well, gold. It's up from $60 to 209. All right. So it's over a triple, while gold is up, let's say 50% or something. You can do the math yourself. but it has significantly outperformed, which I think is going to happen with Pan American Silver. When silver does what has done, I think this thing is just rocket fuel for Pan American Silver. Alamos Gold, I'm a real big fan of Alamos Gold because they're making records in free cash flow and they're pumping that all back into the business to increase their production and bring down their cost, which is using free cash flow to make even more free cash flow down the road. Alamos Gold is my premier mid-tier gold mining pick. Equinox Gold, I love Equinox, what Equinox Gold is doing because they are ramping up full commercial production at two mines in Canada, which will then make them over a 1 million ounce annual producer of gold and making a lot of profit. And that's why I like Equinox. Orla Mining, they're already doing very well at their key mines. They also got assets to build, and I think that that puts them in a very attractive position going forward. Goliath Resources. Now, these bigger companies are the ones that uh, I make the case that even at today, even after they've improved a lot in their share prices, they still offer tremendous value opportunities for investors because even though they've moved up, I still think that they're not even pricing in $2,500 an ounce gold, let alone $3,700 an ounce gold, and not even considering $4,000 or $5,000 an ounce gold, which I think we're going to see in 2026. 4,000 before the end of this year, 2025, and 5,000 in 2026. So they're not even near to pricing in higher prices of gold and silver. They're hardly even pricing in current. Or you could even make an argument that they're pricing in less than what gold and silver are currently trading at. So these are tremendous value propositions. But then you go down the food chain further, and there's even a greater value propositions. Now, of course, there is more risk as you go down the food chain in a general sense, but even those companies are not pricing in where we are. I think they're even pricing in a lower price of gold than the bigger companies. And so if you think like me that 4,000 and $5,000 an ounce gold is coming, these companies offer tremendous opportunities. Companies like Goliath Resources, my highest conviction gold explorer with an important discovery. I think they are on the way to proving that they have one of the most important gold discoveries in the prolific golden triangle of British Columbia, maybe that even rivals the greatest, which was the Eskay Creek mine. Now I know everybody's going to say, "Oh, Alan, that's saying a lot." Eskay Creek was one of the greatest mines ever, and so forth. I know all these things. I've followed these things for 32 years. I know how great a mine Eskay Creek was. But at Goliath, you've got this widespread visible gold that I've never seen in any system anywhere before. That makes it a really important gold explorer with an important discovery, but the valuation doesn't add up to what that is worth. So, that's why I am so bullish on a Goliath. Vizsla Silver, they're a sponsor of my reports. I'm very thankful for their sponsorship because I think my audience is going to be able to have a front row seat where I do interviews as Vizsla Silver grows into the next major silver miner. They got a fantastic project. If you look at the free cash flow it's going to generate and how quickly it's going to pay back the capex to build the mine that they can put it, they're working towards bringing it into production by about 2027. It's going to be a free cash flow machine. And that's if you just use current prices of silver. If you use silver and gold, if you use where I think it's going to go, this thing will print money like the federal like the politicians print debt and the Fed and the bankers print money. That's what they're going to be printing, free cash flow from that mine. But again, I'm biased because they're a sponsor, so do your own homework. Another company that has a phenomenal project is Amex Exploration. That's also a sponsor of my reports. They've got a gold project that's upwards of around 1 million ounces of gold, where it's probably got an average grade of around a half an ounce per ton. You do not find those kind of projects anymore anywhere in the world. And they have one, and it's in Quebec, and it's right beside, like literally 5 miles or 6 or 7 kilometers from a town that was built because of a mine in the area. It's in the best jurisdiction. It's got a fantastic resource. They've got other deposits around this Champagne zone that is going to be their start of their mining operations, and I think it's going to be a decades long mine there at Perron. Uh, there's again, I'm biased. They're a sponsor. I'm happy they're a sponsor because they enable me to do the work that I do to provide my reports for free to my audience. And secondly, I love that these great companies are my sponsors because I can do a lot of interviews with their management and give my audience a front row seat at what I think they'll grow into much bigger companies. Norsemont Mining, this company has a 2.7 million ounce resource in Chile. This is elephant country for these kind of systems. And they still have under $100 million valuation. I've talked a lot about this company, and in this particular video, actually, that I just put out a couple days ago. So why don't you click on play and you can hear why I'm so bullish on this. But at the end of the day, the way that they're being valued for 2.7 million ounce resource, and the fact that they've got mining permits. They've got the ability to grow their resources. They got a plan to move the project forward rapidly towards getting it back into production. This is a great story that, again, is being ignored. It's being given away at under $100 million valuation. This is the kind of company that should be on its way to $1 billion valuation, and yet it's being priced at under 100 million. This is another example of how underappreciated the gold stocks and the metal stocks are. Aris Mining, they're about to increase their throughput at their Segovia mine by about 50%. Go to their news release, you'll see the exact statistics, but they're cranking up their production and they're already making it's already a free cash flow machine. So they're increasing the quality of that free cash flow machine of a mine at Segovia. And then they got other mines that they're developing that will keep them making a lot of money for a long period of time. Golden Cross is an explorer that is in Australia. And, they say the best place to look for a new mine is where there's an old mine. Well, one of the greatest gold mines ever for high grade gold is the Fosterville mine in Australia. These guys are 30 kilometers from the Fosterville mine. It's in the same kind of rocks. It's got the same geological characteristics. There was a lot of historical mining 100 years ago or so. There's evidence of it all over the place on their property. They're drilling now. They could have asset results out at any time. Golden Cross is another one that I'm very bullish on. Nuvau Minerals. Now, just a minute ago, I said that the best place to look for an old mine is where there's a new mine. Well, actually, they've got mines on their property. This property was in production by Glencore until 2022, just a few years ago. And so why did they put it on care and maintenance? Because Glencore is a major mining company. This was a non-core asset for them. So they were looking for a partner, someone to take it over. They did a deal with Nuvau Minerals, and now Nuvau Minerals has a 1,300 square kilometer project in the Abitibi that has only been ever looked at for the last 60 years. Before Glencore, there was other major mining companies mining there. It has a 60-year mining history, and there is still fruit on those trees. And that is one catalyst that Nouveau is moving towards. And yet, again, under $100 million valuation. They've got more than that in infrastructure on their property with the mill and the other mining infrastructure, the underground workings. It would cost them hundreds of millions of dollars to redo what Glencore has already done for them. And one of the mines that they're going to bring back into production that has a network of underground workings is the Brace McMcLeod mine. This is a well-known mine in Quebec, and they're gonna. That's one of the assets that they're one of the mines that they're going to bring back into production, or one of the deposits they're going to bring back into production. And right beside that, they've made a gold discovery. This 1,300 square kilometer property in the Abitibi that is one of the best gold mining districts in the world has never been explored for gold. All the companies that have owned it for the last 60 years were only interested in the base metals. But this is one of the most prolific areas in the world for gold, and this project's never been. And they've recently made the first target they drilled for. They found an orogenic gold system with visible gold in the very first hole. And it wasn't one little speck, it was a significant amount of visible gold. I think they've got an important gold discovery sitting right beside the underground workings of a base metal mine that they're going to bring back into production. This is a phenomenal scenario. And yet, again, their valuation is about less than $50 million Canadian. McEwen Mining. I talk a lot about McEwen Mining because I think that this company, with the quality of their gold mines, they're a junior gold miner that produces about 135,000 ounces of gold. They're doing work they've recently broke ground on a new mine called Stock that's going into production, and they're going to that will start producing in 2026. So they're working towards increasing their production to over 200,000 ounces over the next couple of years. And for when you look at gold production based on the current prices of gold producers on 100,000 ounces of production, they get somewhere between 800 million to 2 point some billion in market value. That's what their valuation is when they're produced for 100,000 ounces of gold production. This company is producing 135,000 ounces. So theoretically, based on my calculations, they should have well over $1 billion valuation in US dollars. They currently only have a $1 billion valuation. Now, that doesn't factor in their increased production. I think they're undervalued just for their junior gold mining operations. But then they've got one of the best copper development projects in the world. Their Los Azules project in Argentina is one of the top 10 undeveloped copper resources in the world for size, and it's also in the lowest cost quartile. When you start talking about size and low cost, you're talking about a free cash flow machine. So they've got attached to an undervalued junior gold miner, they got one of the best undeveloped copper companies, copper projects in the world. And yet They're being undervalued for their gold mining operations alone. I could go on and on. I talk about Sierra Madre Gold and Silver, my new pick, Mithril Silver, in this video. Let me go back to a couple days before that. I did my weekend show, and I talked about a bunch of companies in that show. When was it here? 5 days ago. So that would have been which one is it here? I think it's this one. Uh,
This soft mineral melting my mouth to
this
recall Gum's teeth
advertisement
and
thing again. Okay, so here's another batch that I talked about. Tech Resources, Meridian Mining, IDEX, Tectonic Metals, Barrick Mining, Goliath Resources, Newfound Gold, North Isle Copper and Gold, Juggernaut Exploration, Sierra Madre Gold and Silver, BlackRock Silver, Equinox Gold, and Norsemont. Let's go back and look at a couple weeks ago. Where was my mining picks in the news? You just go through all these and I do interviews with management, North Isle Copper and Gold. This is Sam Lee. I did an interview with him. Kirkland Lake's CEO. I did an interview with him just in the last couple weeks. Here's the interview I did with Golden Cross recently. All throughout these reports, I talk about companies and with management, and I have as much enthusiasm. I think I currently have about 35 picks. Send me an email at rocksandstocksnews@gmail.com and I'll send you the list, my current list. And I'm passionate about every one of them because all of them, whether they're a sponsor, they're a pick, or I own shares in them, they all go through my filter, which I've built up over the last 32 years that I've been in the mining business, 20 years as a researcher and reporter on the sector. I've worked with some of the most talented geologists, geophysicists, geochemists, and I create my filter based upon that work and also my work in the stock side of things, understanding how to market, what people are looking for, and that's what I follow in all of these various reports. I was planning to only talk about my bullish arguments for silver and gold and a bearish argument for the US dollar, but I wanted to give you some examples of some of the picks that I made and some of the picks that I continue to make and will continue to make because at the end of the day, I still think that the generalist investors, even the investors inside that have been long-term bulls on the price of gold and silver, I don't even think they understand how undervalued and underappreciated these stocks are and where they're going in the future as we see gold and silver go much higher. The reason that I say that is if they did, they'd be holding on to these for dear life, and these stocks would be trading not at steep discounts, which is where we are today. I can make these cases all day long. I got 35 examples of them as my picks in my report. I'm always looking. I just a couple just in my last show, I added another. I've got some more that I'm adding. And I'm able to add these value propositions while gold and silver have done fantastic, have made important breakouts. Gold keeps making record high after record high. Silver's about to do the same. And yet, these stocks, the stocks of gold and silver, haven't even started to price in when gold was cheaper than it is now and silver was cheaper than it is now. And it doesn't even start to price in where they're going. And so, getting back to what I started the show talking about, which was stagflation and the death spiral of debt and the cost of servicing the debt and the broken fiat currency and debt system, you have as an investor a choice. You can either be a victim of those things, or you can prepare yourself for what's coming ahead. And the best way to prepare yourself is through the gold and silver stocks. I am very bullish on the metals as well, and that's a great way for you to protect your wealth and to fight against inflation. But if you really want torque, that's in the precious metal stocks, because you don't even have to go down the food chain for torque. You can go to the best in breed major gold miner like an Agnico Eagle, and that's outperforming gold significantly, and it will into the future. And some say, "Oh, well, what if there's a big stock market crash?" Okay, so what if there is a big stock market crash? They think that that's going to mean that all the gold stocks are going to go down as well. Well, hold on a second. What's the best protector against a big correction in the stock market? Cash, free cash flow. And don't forget, even after the 2008 economic crisis, what was one of the first assets that came out of that only a couple months after the 2008 economic crisis? Gold. Okay. So even if there is a big correction, the cash that these gold miners and the cash they're sitting on and the free cash flow that they're generating is your downside protection. So how much is the downside risk in a correction? Not very much. And then if you think that the gold stocks start moving, I could go on, and I'm not going to. I just think that investors, they're either going to be victims of the stagflation and the death spiral of debt and the cost of servicing the debt. They're going to either be victims or they're going to take advantage of it. And the best way to take advantage of it is through the precious metal stocks. As always, my shows are for information purposes only. It's important for you to do your homework, speak with your financial advisor before making any investment decisions. Be aware of my biases. My ultimate bias is I'm like anybody that has an opinion on anything. I want to be right. That's my biggest bias. Now, fortunately, I'm right a lot more often than I'm wrong. Actually, it's quite incredible. And if you don't believe me, just go to my Substack. And you don't even need to read all my reports. Just look at the headlines, and you can see how right I get things on a regular basis. So I am biased, but I think that I don't let my bias cloud my thinking, and that I do a good analysis. And you can check that out for yourself on my Substack. On that note, have a great day, and we will talk to you soon.